The financial services sector is emerging from the worst financial crisis in 80 years. Tighter regulation, an overhang of debt in the West, and the immense growth in the power of banks in emerging economies will transform the landscape of banking. Of course, we're not out of that crisis yet. We may be going into another one. But what opportunities and threats are created in this environment? What are the main lessons that banks will learn from the crisis? And what value is there, to top it off, in the US in technology stocks after that global financial crisis? So we have Kokkie, Kooyman and Douw Steenekamp from Sanlam Investment Management Global. They join us in the studio to share their insights, and of course Chris Hart is still with me as well. Kokkie, let's kick off with you. You know, banks should be trusted, they should be stable, they should be reliable, and they've come in for such a bad press recently. The Barclays issue, the banks that have lent too much money to people they shouldn't have lent it to, big reputation issue here.
No, there are a lot of bankers who have shot the banking industry in the foot, but I think the point needs to be made that, you know, all bankers are now being shorn with the same on the same basis, and even in Barclays, I mean, that trading room is a very isolated unit. If you look at the total number of employees that Barclays has, so but I think the bottom line, what has gone wrong, specifically on the investment banking side, is the incentives were just way out of line, because the guys, the profit pools they play with are just so big that you know, if you just make a marginal difference, the multiplier is huge. And so I think what Bob Diamond specifically and a lot of other heads of investment bankers missed is that the culture went wrong. You know, it just became very profit driven for certain individuals, and the rest of the banking industry is suffering. Unfortunately, you've got this whole problem that you had in the US with the subprime, but then the same thing happened in Ireland. So, you know, generally banking has not got a good name. But, you know, we've invested in lots of banks, even if you just think in the US. US Bancorp is one of the banks that Warren Buffett is heavily invested in, has not put a foot wrong. You know, so for investors, you've got to look at the cultural and the DNA of management.
And what are they being rewarded for? I recall in the mid-2000s on the retail side, asking one of the branch managers in one of our banks, saying, what are you guys rewarded for? He said, we used to be rewarded for managing risk. In other words, if you had too many bad loans issued, you were in trouble. Now we're rewarded for gaining market share. That was the shift.
Absolutely.
But our regulators, I think, we've kept a check on that.
We actually, I believe, have got a very good show here. I think that's correct. I also think bankers are getting a bad press because it's an easy label to actually and deflect the actual culpability from the political side and also central bank side, that you're getting from Bank of England and Federal Reserve. There's a huge amount of culpability in terms of market manipulation and from politicians, from central banks.
Kokkie, you're nodding a lot there.
He's totally right. I mean, the Bank of England, well, the subsequent investigations will reveal, I'm sure, that they were aware of what was happening, and certainly the Fed in the US, Barclays, were warning them, and they were telling the Bank of England, you guys have got to look at what's happening, and they didn't. So you're totally right. And by the way, on the whole housing scandal as well in the US, the politicians benefited and closed their eyes.
And in fact pushed Fannie Mae and Freddie Mac to lend more than they should have.
And this is why one needs to have a more balanced approach. It's so easy to stick evil, greedy banker and please vote for me, even though I'm a scoundrel in my own right.
But let's look at the bank. If you think what a bank's got to do, I mean, banks have to do things that other companies don't. They all expected now to make a return for investors, but they have to do other things which Anglo-American or Murray and Roberts doesn't have to do. They've got to provide capital for the economy, they've got to lend, and they've got to take deposits and look after them. It's now time, people are saying, to split these functions up.
Specifically, look, it was actually Clinton in the US who repealed the Glass-Steagall Act and allowed investment banks and normal commercial banks to merge again. And that opened the whole Pandora's box, in the sense that you allowed the guys who trade to do that at the risk of depositors and eventually the taxpayers. And I believe that should be reversed. I agree with Paul Volcker, not that you should mention my name with the same.
No, I'll tell him you said so.
But you know, and who fights it? Who's against it? Obviously Barclays and all the big investment banks. So whether that's necessary in South Africa, because in South Africa the investment banking portion has never been big enough to really swing, and the markets that play are not big enough to have such an impact. So it'll be interesting to see if it does get push through in the UK, and I think it will most probably. And in the US, it's more a question because the investment bankers are big financiers of presidential campaigns. So whether that happens again, but I think it should, and if it does, whether it happens in South Africa, that's another question. But if it was, Investec would be the one. It's the biggest investment banking.
So it would be the least change would have to happen to Investec, perhaps.
The most.
The most
they
change.
Would be split. Yeah.
But the main thing is that the sector's tainted, and I think there's still enormous systemic risk still embedded in the system, and especially in Europe, where you've got a potential for a cascading problem. In other words, a full-scale failure of the banking system is possible in Europe, and this is where one says, where do you find the opportunities?
Well, let's talk investment now, investing in banks, and the point has been made about our banks that we escaped the worst, partly because of Errol Kruger warning them and the National Credit Act and various other things. How will, if the fashion for breaking up the banks comes here, what will happen to our sector? You mentioned Investec.
Not much, I think, because, as I said, because the investment banking portion is fairly small, so it won't have that much of an effect. If you just go African Bank, Capitec, not affected at all. Standard Bank, Africa is dominant. So I think internationally, Chris's point there is important in that I would disagree with you on one word. You said especially. I would say mostly Europe. Because the US banking system has largely been recapitalized. The bad debts have been provided for. The reserves to bad loans are almost 2 times. Whereas in Europe, you've still got a big problem, big sovereign exposure. But in terms of what we ourselves have been doing, most of our investments over the last 3 years has been more in emerging market banks, like the South African banks that were always well capitalized, didn't have a mortgage over lending problem, and kept generating fairly high returns. And
didn't sell on rubbish bonds to someone else to look after. Douw, let's bring you in here and let's talk about those tech stocks in America. Last week we heard about Microsoft and Google, and Microsoft, their first loss quarterly in 26 years since lifting. Apple's come out now. The significance of this for us?
I'm not too sure what the significance is of the results in the short term. Obviously, in the US, they tend to focus a lot on quarterly results, and I think one should try not to read too much into what happens from one 3-month period to the next, especially since the product life cycles seem to have become quite short, and that seems to have quite an effect on those quarterly numbers. But just looking at the tech sector overall, we discern quite a lot of value in that sector. And for myself, being someone who's actually sort of had one eye on that sector long enough to remember the dot-com bubble, it's very interesting now to see the kind of multiples one can buy some of these now very well-established companies on, and compare that to the multiples that we saw sort of 12 years ago.
Chris, what interest is there from investors in American stocks like that? We can't buy them here on our exchange.
But I think there is interest, and this is the point. There's iconic names, as we've mentioned.
Everyone's
got
already them in their house,
and that kind of thing. And the point is that you're making is that this sector has become value, all right, and there's genuine value in the sector. Plus, there's growth on top of it. It's still fraught with all sorts of things that you can have. How can I say, fallen angels? Where RIM is one of those companies where if you're not making it, if you stumble a single quarter, you can. It's a long way back.
And if you fall off on the edge of the cliff, they stamp on your fingers and you're gone.
So you do have that, but it's one of the big investment themes going through the global economy at the moment.
Douw, looking at those companies that we mentioned?
Well, I mean, the best example is probably Microsoft, which is the biggest single holding in our portfolio. Here is a company which has been very well established. They've been around since the late 70s. They, in the enterprise space, so that's where businesses spend money on computers, they have market share globally upwards of 75%. And that is a very unique position in any global company to have. And you can buy this company on a single-digit multiple.
Why can you buy it on a single-digit multiple?
Oh, by the way, also they're sitting on $38 billion of cash. So this is not a bank with sovereign exposure to Europe.
So the balance sheet is very solid. I think the reason the market's sort of become or has accorded at such a low multiple is perhaps because there are sexier alternatives out there. Also because there's a perception that they've missed the boat in terms of a lot of the kind of products that people are spending money on now, telephones and tablets. But we've been following quite closely the progress that they're making in development of the new operating system, which will be launched later in this year.